Yo, what's up guys? Welcome back to a brand new video. Last time we talked about how Trump pumped the market and what could be the outcomes, and a lot of these levels actually touched. You can watch that video back. Thank you, by the way. This is the start of this channel, and so far I think it's fine. But today we're going to talk about momentum, uptrends, downtrends, and sideways movement, and how you can profit most out of all three of these scenarios, or if you're investing, where in this swing you should put in your money. Now, an obvious warning, I'm not a financial advisor. Please always do your own research while trading or investing. Yeah, now that's out of the way, let's get right into it. Now let's start on the bigger picture. What do you see here? You technically already see big swings. Well, this was obviously very big swing. We're swinging. Now this is also true if you go more locally. So let's say right here, we're swinging up, swinging down, up, down, up, down, up, down, up, down, up, down. And even tinier swings like that, you know, up, down, up, down, up, down. So it doesn't move in a straight line up or a straight line down. Now, what does this mean for us? Now, as investors, it's more interesting to buy as low as possible and to sell as high as possible. And the reason is very simple. If you bought here after this pump, and if you sold at the perfect moment, which is very rare, you would have 22% profit. Very nice. But if you bought right before that pump, you would have 61% profit. Now that's basically 3 times as much, and the difference in buying was a week. Now, nobody can predict when there's going to be a price impulse, but we've talked about these ranges in the last video as well. And the range is basically sideways movement. And this is an uptrend movement. Now, technically, I would call this kind of a local downtrend here, but then it turned into an uptrend. So there's always trends in trends. It's good for trading to know what trend you're in, if you're obviously going down or if you're going up. That can depend on what type of trade you want to make. Let me show you an example. Let's start with trading. If you want to buy Bitcoin and sell it higher as a trader, you want to buy low and sell high, right? Now that's easier in an uptrend. So here we had our lowest low, then we've had a high, we had a higher low, then we had a higher high, and now we're looking for a higher low to start our trade. Now this one was a little bit tricky, but let's say you wanted to long here because of this one over here. You would take a maximum of 6% loss, which is a lot. This is like a long trade. This is not a tiny trade. And you want to base your profit off of this last high because that's a local resistance. Now this is not the best trade, so you might have to like change your risk. Anyways, I'm not saying this would be a perfect trade because it's also in the middle of this range, but you did just show a reversal from a downtrend to an uptrend, and you're trying to get in there as fast as possible. Now in this case, if you did take this trade and you would let it go, you could have made, 80%. Obviously that's not going to happen, and I would probably have taken 100% of my profit on this high, which would be 17-ish%, which is again insane. Now this is in an uptrend. Now in a downtrend, you can also do something that is called shorting, which is basically selling Bitcoin, but when it goes down, you earn money. So it's basically like reverse buying instead of selling. Now here we're going in this downtrend, right? We have the high, we have the low, we have the lower high, kind of a try of a higher high, but you kind of fail. Then you have a lower low, and you kind of have to zoom in, but based on this last peak or this last peak, you take your trade, but this time it's short because we're going down. We see the reversal of the trend up to down. So we go down, let's say based on this last one, and you want to take your risk just above this other peak, and you want to take profit right above the last low. Because you're sitting high in this range, start of the impulse is also the bottom of this range, you have a better chance of going down than up because you're forming this range. But we took this short because the trend was down, and you want to go with the trend. The trend is your friend, is what they say. Now in this case, that would have worked out beautifully, and you would have had 8.8% profit, 2.6% possible loss. After that, you would be stopped out of your trade because that's where you set your stop loss. Now, let's say you took this profit, trade is closed. Now what happens next? We have a higher low, have a higher high. We kind of get stuck here. Equal high. We don't have another higher high. We slightly lose this low, and then you can see it kind of happen here if you zoom in. This last little high, this drop off, gets tested back. This would be, I would probably place it right here. This would be your short entry, and you want to place your maximum risk around there. This is just, again, not the perfect trade. You want to base it to the last low to be the safest, because it could have gone up after this, right? And that would have been a good trade. Again, you're on the high side of this range, this box. You have a better chance with a short, which is the reversed buy, aka like a sell. Now then, what happens next? We lose some stuff. We go lower. We have a higher low. We have a higher high. Kind of get stuck here. And then this one, again, is a bit tricky. But let's say you've based it on this little red candle. The video about candlesticks will go up soon or is already up. And here you take a long, aka you buy Bitcoin because you're on the lower side, you know, closer to the lower side of this range, aka the box. Now, what is the risk you are willing to take? We are willing to take about 2% risk, you know, below these little dots of volume, which is money. Our goal is the previous two highs, which is a little bit of a resistance. And then, yeah, boom, you have another trade, which in this case was successful. Again, taking these trades afterwards is easy to draw in. Taking it in the moment when all the information that you have is that's a bit more difficult, obviously. I don't think I would have taken that trade specifically, but just to show you guys, uptrend, downtrend, and to act on it. Now, before I talk about momentum in terms of investing, obviously, the lower you go, the better it is to invest. Let's say I open the chart. I open it every day. I see we are on the low end of this. I buy a little bit here, right? We dip under that. I buy a little bit here. We go up. Maybe I sell a little bit here, depending on what type of trader / investor you are. But if you're purely investing, you want to go where you're low. You buy a little bit, right? And obviously, you wouldn't buy perfectly at the bottom. Just to visualize it, you go down, you buy a little bit. And these are all small amounts. You don't put in all your money at once because, as you can see, it can go lower. And then once you've gone up high, you try to sell here because it's for the last high. You go up, you sell a little bit here. You go down, blah, blah, blah. You go up, you sell a little bit here. You sell a little bit here. You go down, you sell a little bit here for safety, sell a little bit here. So you bought here 6 times. And you sold here 6 times, and let's just say on average, let's just say here, you would have had 64% in profit. Now, again, this took 196 days, so it's not as simple as, oh, let's make a quick buck. Making a quick buck usually is a scam, so don't fall for those people who are like, oh, you want to make 10 grand a week? You know, like, don't fall for that. But yeah, now that that is discussed, I want to talk about momentum. As we said at the start, we have these swings, but then here you don't really get the nice smooth, even though it goes up and down, smooth swings. You have these kind of areas where here too where price is kind of flat, and that is the sideways movement that I was talking about. So if we zoom in on this, you can see they're not perfectly flat. These are just moments where people don't know what to do. So this is usually after a drop. People are like, okay, are we going up? Are we going down? I don't know. And then they try to go up and then they fail. You lose that level, which is technically a box, which is a range, which is sideways movement. Anyhow, you can kind of see it here. We dropped. People don't know what to do. We lose, but we get back. People don't know what to do. We try to go up. We go back. People don't know what to do. And at some point, there's not enough money buying and selling that the price isn't moving. People are just waiting for something to happen until something happens, and then boom, it goes back up. And then this would be resistance. We break through it, and then we're back into the uptrend in this case, going all the way up. And it's the same thing for like a little downtrend. We have these little things, and then it turned into a little downtrend here. I hope this makes sense with all the Scrabbles, but basically What I hope you learned is when you look at this chart, you see where there's an uptrend, a downtrend, and a sideways moving trend. And especially in the more recent price action, what do you see here? Just think about that. What do you see here? Because what I see is we were going up, and then you see momentum starting to slow down, and we're falling back down. And if you want to go even more recent into the price, what do you see here? Because what I see is we were trying slowly to get up, and then we failed, and then we dropped down until we find support. People are buying. This was a kind of crazy price action, to be honest, but we were trying to go into an uptrend, but we didn't beat this high. This would have been a continuation of the uptrend, but we didn't. So we went lower to try again. And now we basically have to try to go higher than this one, and we'll probably fail the first time, but that's fine. We can go as long as we're higher than the last low, and then we'll probably beat these two together, and then we'll challenge what is here, what is here, what is here, what is here, you know, and then you start climbing up on the uptrend, and then you can base your trades on that. Now this is obviously for bigger swings. This takes days. If you're more into local price action, let's say on the 5-minute chart, what do you see right now? Because what I see is there's this point where we didn't know what we were going to do. A lot of money in one little place. So this is resistance right now. We went down, made a higher high, higher low, higher high, higher low. This could have been a trade. Would have been a trade of 3%, which doesn't sound like a lot, but that's really nice. And then we actually lost this low, so you probably would have been stopped out, which is fine. Then we didn't get this high. So because we lost this low, it was a lower low. You could technically have already made a short here. Bit risky because you didn't really get enough confirmation, but it was all right. Let's say a percentage of risk, and you would still be in the trade right now. Now, will this trade succeed? I don't know. We are technically in a little uptrend. We haven't really lost anything yet. But yeah, that's how you would trade based on momentum, uptrends, downtrends. You can earn money while the price is going down. A lot of people don't know that, but you can. And even when the price goes down, like here, even without shorting, you could have made money. Let's say around here, you could have made 3.5%. Let's see here, not really, maybe 1%. I mean, I don't really like this entry, but maybe this one though, 2.5%. Yeah, so you can even make money in a downtrend buying Bitcoin if you're trading. And if you are investing, then you shouldn't really care too much about the short-term news. A final example before I end this video is I started investing in crypto around here in 2021. So I bought here, which I thought would be the bottom because we were going to continue up, but that didn't happen. And we went lower and lower and lower and lower. And then here I kind of gave up and sold. And then we literally got up higher than we were before, which was 130% increase. Now, I do think I did get in at some point here, but the message is if you're investing, don't be too afraid of it going down in the short term. Just make sure you have more money that you can invest later on. So if you invested everything here and you couldn't buy anything here, you're not missing out on profits here. Because obviously from this all-time high, your profit would have been 60%, still nice. No panic. If you didn't panic sell, you still had 60% profit. Very nice. It did take like 4 years, but whatever. Compared to, let's say you also bought here, so let's say average buy is between them, you would have made 180% profit. Even though the money you spent here is still in there, you have averaged your buy-in price to around 39K in Bitcoin in this case. So yeah, for investing, don't worry too much on the short term. Don't put in all your money. First of all, put in money that you can afford to lose, obviously. And yeah, always do your own research. I'm not a financial advisor. And please leave a like on this video if this was useful. The video about candlesticks should be out or should be out soon. Please subscribe to the channel. It's a new channel. And yeah, comment down below your thoughts. Please join the Discord server. I do share pictures of the charts. I answer questions. I chat with you guys. And yeah, that's all for me right now. See you guys later. Peace out.